Hello, welcome to another Futures Trading Stream. This is a market update for today, Friday, July 21st, 11:08 a.m. Okay, let's check what the market is doing. But first, let's take a look at what happened yesterday, where the market is right now. And now the market is coming from this situation. Let me pull this. Where all the time frames were until before yesterday were in sync, trending to the upside. Very elongated market, very elongated in the daily time frame, with a breakout of a 3-day range here in the daily time frame. Breakout of the weekly 4-week range in the weekly time frame and the 30-month in the monthly. The first sign of change, if anything happens, is going to be reflected in the daily time frame. The day before yesterday, the market finally has a breakout here to one time frame. The trend to the upside ended yesterday and got inside previous day range, inside the 3-day range. Now the thing would be monitoring for continuation. We will see market having extension to the downside here and trading towards the opposite side of the range. It didn't happen yesterday. And it did close. The market closed right at the high of the range. Okay, and today so far we are having an inside bar in the daily time frame. Is this going to have downside continuation, or are we going to have some rebalancing? The odds that this market is too long, too elongated to the upside, yeah, you can see it, right? The odds some rebalancing were there. It did happen, but what we saw, what we can see is the market just didn't have volume yesterday. Look at the tremendous amount of volume that we have here in these 2 days. And yesterday just dry, volume dry. It was very low volume yesterday relative to the previous 2 days that we have here. That's part of the job, part of the homework that I do, that we need to do to have some perspective of the market before we go to market profile. Now, checking market profiles, what we have yesterday was very questionable, I won't say very questionable, but the way how this market break. At the end of the day, the market, we could see a lot of selling coming from daily holdback here in this day, yesterday, and leaving, the day gave us a spike to the downside very late in the session, but was very, 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 very weak here, very mechanical. What I mean with that is, just look at the way how this market was sold here. Spike to the downside, double low here, and this high being exactly at the center of yesterday's range. So the downside movement, the odds that we will have downside continuation were just reduced. The odds that this was rebalancing, that this break that we had yesterday was rebalancing rather than a more powerful long liquidation, were high. Okay. Now, it made a low, a very questionable low, very questionable low. We have a very questionable low from yesterday, exactly to the tick, you can see. I didn't put this yesterday. This was here. This level, this reference was here when we had a breakout on the 17th. Well, the 17th is Monday. We had a breakout on Monday. Very questionable low. And in the upper side, from yesterday, we have these questionable levels. Right? This one, in particular, this one here. And then just the laggard part, the laggard stage of this trade appearing down here. Yes, the laggards. Those traders that were, watching the market going lower and lower and lower, finally having, quote unquote, confirmation. Now the market is going to the downside. It's time to go short. They finally get short here, without assessing that this is very risky, that this probably is the laggard stage of this trade. And notice how we are talking about several time frames here. We're talking about the intraday, we're talking about the daily, we're talking about the weekly, and we're talking about the monthly as well. And when we see this kind of movements, this kind of pieces of information that contradict each other, one piece of information pointing or signaling the market can have downside downside continuation. Another one that can have a pullback or a reversal. Those are time frames. Those are pieces of information from different time frames. Identifying which is very important. I consider this a very important thing to do, because it would help us. It will help us to assess, to label the market, what kind of market we are having now. Yesterday we have a rotational market, kind of like a hybrid market between rotational and trending. We have identified the market was very long. And what are the odds now, right? What are the odds the market having a downside continuation here? When the market has this overnight, very mechanical selling here, and an overnight that is, you can see this overnight here. Can you see what the overnight is doing? Most of this trade, pretty much all of it, above sell. Meaning that all of this inventory, all the overnight session is long. Okay, we had these levels, these intraday levels from yesterday. I'm going to open this one so I can see, because some of these references I have already removed from my screen. We have this daily halfback here. Double. Now this is a spike that happened late in the afternoon that coincided with halfback from this day, which is also another important piece of information that we had yesterday, right? To monitor this market for downside continuation. But that is history now. We have these two levels, these intraday levels from yesterday. Finally, last settle, and something that I consider very important that I put here, the 3-day range high. What is that? Is this range here that we have here, 1, 2, 3-day range here, and this high here. The market has re-entered this range, but this is not having downside continuation. It's not targeting, it's not trading towards the opposite side of this range. The market has re-entered this range. We didn't have volume, and we are having some sideways trading here. How it's going to end, how the day is going to end, I don't know. If you know somebody that knows, please let me know. Now, next week we have, the next week is packed with events. We have we have FOMC, we have GDP, we have PCE, we have Meta, you have Microsoft, big tech reporting next week. And the market has seen, right? Good earnings, good reports, everything is nice, but the market is breaking. After Tesla and Netflix, we have this big break here. Notice that it didn't have downside continuation. It didn't have volume to the downside. And the expectation, try to get in the mind of your competitors. Who are we competing against? Who are you competing against? What traders will be thinking, okay, this happened before, and now when we have Microsoft having amazing earnings, or Facebook or Meta having amazing earnings, the market doesn't matter what, the market is going to break. Because it happened with Netflix, it happened with Tesla, and it's going to happen again. Just try to get in the mind, because traders do what works until it doesn't work anymore. Going back to today, okay, we have this huge accumulation of volume yesterday in this area, following another one from the day previous here. This day and this day have huge volume. This one does not. Now, the market opening inside previous day range really give us a market with high also being a rotational market. The odds are high. And the closer the market opens to the center of the previous day range, the higher the odds also that we're going to have a choppy market. Very choppy market. And that's both of them. Both situations were advertised and both we had today. The key is putting things in context. What we try to do is understand market dynamics here. All of these levels that you can see here, all of the levels that I have here, I don't use that for trading. I don't buy here or sell here or add to my position here or whatever. I use this to monitor the market, what the market is doing. Because if I'm going to do something, I first need to identify what the market is doing. If the market is having a rally, what is the strength of that rally, for example? Is that short covering? Is that new buying? Is the market too long? Or is the market coming from a situation when it was too short? Is the market having a breakout? Is the breakout happening in the daily time frame? Is the breakout happening in the intraday? All of those things have to be put in context in order to have an assessment of what I think, right? What you think the market can be doing at that moment. Because nobody knows what the market is going to do. But we may try to identify, okay? But we may know, the goal is to know what the market is doing at this moment. And based on that information, plan or execute a plan that we already thought before. What I mean by that, for example, just to give an example, yesterday, everything is easy in hindsight. Okay? To begin with, everything is easy in hindsight. But we can see, right? We can see the market is going to the upside. We can see the market is trending to the upside. All time frames were trending. Okay. So if the market is trending to the upside, which side of the market you want to be? You want to be in the short side, or you want to be in the long side? That's the first question we need to ask. Okay. Now, being this elongated, they also having some rebalancing here, because the market was coming from a breakout after a breakout after a breakout after a breakout after a breakout, multiple gaps, weak buying, mechanical buying, Um, something very unusual, happened a couple days ago. No, when we have this breakout with incredible high volume, something that I didn't see before. Because what I usually see, what you usually will see, is days like this, okay, days like this, where coming from a market that is super elongated, and then we have a day like this with high volume, but the market doesn't move that much. The range is narrow, and there's a lot of accumulation here, and then a long liquidation follows. We didn't have that here, and this is what the market gives us. You know, the participants of the markets are always the same. We have retail, we have small traders, we have investment money, and we have traders, bigger traders as well. All them in different time frames. All the participants are the same. What changes is who is the retail. A lot of times, retail. This is just I'm just repeating some numbers here. 90% of the retail accounts are, dry or liquidated before in the first night, in the first 3-4 weeks. That's just I'm not inventing that number. Right? That's number is real. A tiny fraction of retail or short-term traders are profitable, are consistently profitable. If I say maybe 3 or 5%, that's the real number, right? If I say 90% of the accounts are closed between the first 3 or 4 months, that's being generous, okay? But there is a tremendous influx of short-term trading here. And what we are having today, put that in context. All of the things that we were talking about, we just put those things now in today, in what is going on today. We have this situation when we have huge volume here, a break yesterday, a rebalancing, a weak break. Yesterday was one of those days, but that wasn't complicated to read. It was clearly that this is a sell the rally market, sell the rallies, take profits on the breaks. Yesterday, it was a change to all that was happening before, but it didn't have volume. And now the market opening is right at the center of the previous day. Now I'm going right from this bigger time frame. I'm zooming in now to what's happening right now. What were the odds that this market was going to have some rebalancing today of the short inventory, having the weekend ahead and having these big pieces of news, big pieces of information that are coming into the market next week? As we say, rate decision by the Fed, PCE on Friday, Microsoft, Meta, what else was it? Was the other big one? I don't remember, but big tech reporting next week. Who want to be short in front of those announcements? Who want to be long in front of those announcements? Put those things in the market, and we have now a market that has opened right at center, pretty close to the center. The high, okay, the odds are that having a rebalancing of the overnight inventory here that was 100% long. This is a very popular trade that happens. This happens 3 or 4 times, okay, around that much, which is a rebalancing, which is a counteraction to the overnight inventory. overnight inventory is long. What is the counteraction? What is a counteraction of the overnight long or to any long inventory? It's a break. Now, a market opening inside previous day range increases the odds that this is going to be a rotational market. The closer to the center, the higher the odds of chop. And trading, or being a discretionary trader, which is what I consider myself, I have all these pieces of information, and I decide what to do with that. We all can see the same market. We all can see the same information here. Some will use this information to go short. Some will use this information, the same information, to go long. What I try to identify is what are the odds for my trade to be successful. Do I have good odds here? If I am long, that my trade is going to be successful. What are the odds of having a counteraction inventory? Counteraction to overnight inventory. Where the market is at this moment. What I think the market is doing in the intraday time frame and in the bigger time frame. We got this low from yesterday. That's very questionable low, exactly at the base of the spike. But the thing here is, if the market is coming down and it didn't have volume, the more the market trades in this area, the more strength this level will the more relevance that this level will, more relevant this level will be in time for what I'm trying to do. Now, we have an overnight profile with two distributions here. Market selling at the opening right from previous day held-back, or what was previous day held-back, which was a level from the market was sold. Okay, the big accumulation here wasn't checked. Check it out here. Do I want to be in this market at the opening? Okay, it's not the same having a break at the opening, market opening and just boom going to the downside, than having, for example, a break, having an opening right here with the gap to the downside, market trying to close the gap and just continues its break. That was not the situation here. It was within the odds that this was going to, the market could deal with the overnight long inventory, which it did, right? So you identify that. Now, what is this? Is this some selling, some serious selling, or this is just a counteraction to overnight inventory? Reduce volume. Can see volume is decreasing here. And look at this period. What can you see? This period here. What period is it? C, right? Look at that tremendous decrease of volume. When this period is, what happened in C? Market goes lower, lower, lower. The lower the market goes, the lower the volume it attracts. We are coming from a day that didn't have volume, and now the market is trying to go lower, and it's not attracting buyers. And if you were present in the market, you would have seen that when V took a low, came down to settle, you have a pace here. You have a tempo going down here, going down, going down, going down. I guess it was somewhere in here. The market is open, B open somewhere in here, and just keep with the tempo. But something happened. As soon as the market took settle, something happened here. And you will see what I'm trying to tell you is I hope you have seen this. This was something happened here. Something was triggered here that buying just came to the market. The buying came here, and a strong buying starts. The market just start to buy here. You know what we suspected that this could have been just a rebalancing of overnight 100% inventory on A. That's what we had when B happened, you know, because all of this trading that happened to the downside, traders thinking, okay, the market was going to the downside yesterday, now it's going, the market is going to do the same. I am not going to lose the trade now. You know, I went short down here yesterday, now I'm going to be really up here, right? There was not having an appreciation of what's going on in the market could lead to those kind of situations. It happened once. The second time it happened, the volume that we have, the reaction the market had when seller was taken, the second time, it wasn't the same. Okay, it wasn't the same. The high is questionable, very questionable, coming exactly from a level that was very questionable. This is the base of a break, you know, or a point the market used for downside continuation yesterday. And notice where it is right now. Now what happened with this selling exactly, you know, traders are short in this market. Traders saw the market breaking yesterday and they are convinced it is doing the same. The market is going to do the same thing again today. Now we have a triple high here. One high, two high, three high. What are the odds now? What are the odds that the market is going to break from this level? What is the risk that my short has if I short from here, or even worse, if I short down here? That POC right here, right at the center of the profile. Can POC move lower? If the next period trades here, the POCs will be moved lower. It is going to be easier to move POC. So far, after the counteraction happened, we are having a trending market to the upside. The odds of this having an upside continuation are better now that SIA has made, or whatever this period is, has made a new high that matches the opening and matches yesterday's as well. Remember, there's some volume here. There's some big volume here. There's a lot of shorts now. All these shorts, all this inventory, all this short inventory, and the inventory from this opening as well. Okay, they're very nervous now. Where the spike is at this level. Okay, I have erased it from this. I guess I have to put this back because it is 70, 75. I think it has some relevance now. I shouldn't have erased. Okay, this is yesterday's spike. Okay. Why I consider this to be of relevance now? Because we have a spike. The market has a spike is something that happened too late in the session to have any kind of confirmation. You know, it is just too late for the market to give you some confirmation that this is good movement to the downside or this is a freak out. So far, this spike is being rejected, which in turn, you know, reinforces this upside spike here, and also value is being built above the 3-day range. Above this range, value is being built here, but it is an inside day. Okay, inside days are a form of balance. Do I want to be in this market? Is the question. It's the first thing that I ask myself when the market opens. Identifying what is happening is the first thing, and the second thing is, do I want to be part of this? What are the odds here? What are my odds here? I have considered this opening. The closer the market to the center, the closer or the higher the odds of chop, the higher the odds of rotation. The market has an action, a directional action to the downside, and the trend, the intraday trend was, terminated. It just ended very early in the session. Okay. Ending one time frame lower early in the session increases the odds of that we are going to have a rotational market. We have that from the beginning. Now the market is just giving us some confirmation that looks like a rotational market. This high is very questionable. Okay, having a rotational market, identifying what we may have. Okay, what are the odds? Right? Having good odds doesn't mean that's going to happen. Remember, just odds, nothing else. This, for me, is a situation where I don't want to be part of this. The risk is just too high. I have seen some strong buying coming here. It has been weakened the second time the market traded through this. We have short inventory from yesterday, and particularly this below this spike, just spike base here. This spike is to the downside. Okay, particularly this area here. I think they are still here. This could be, this upside movement coming exactly from Saddle could be the remaining short here that just, praying to the gods of trading, or thanking to, being thankful, grateful. Oh, okay, thank you for coming back to rescue me. Okay, right? This is just some short covering happens here, either with some profit or less reduced losses here. Just imagine shorting in this area here, right? And market opening way up here, and then coming back to here. Okay, thanks God, right? Instead of being 20 points underwater, 30 points underwater, I am now just 10 or just 5, right? That's a huge relief. Is that what is happening? I don't know, but the odds are high for me that is what happened. Okay, nobody can know exactly what's going on, because remember, all the participants on the market, we have retail, we have daily time frame, weekly time frames, investment money, bigger time frames, all them together in this market. The first thing, as I say, we try to identify the market, we try to assess what is conditioning the market, what are my odds, what the market is doing, having a panoramic view, and then what is the next thing? What do I want to be part of this? What are the odds that this is going to be a rotational market? When the rotation comes, what are the odds that this level could be a level where the next rotation happens? Coming from this kind of highs, inside the previous day range, at the center of the previous day range, inside value area, right? What are my odds here? To me, it's like pretty much like 50-50 here. And I being like that, it would be just like, I'd rather use toss a coin and use that for trading. Why do I use this software? Why do I spend, software is not cheap. Why do I use this if my odds are 50%? 1 penny, 1 coin, how much I spend? one quarter, right? Just to toss it. The odds for me here, this is a choppy market. So far, I haven't seen any significant thing. Notice how volume is how much low is? Maybe 10%? Let's check. Yes, 10%. It's about 10% lower. And notice what this is another thing, right? Did you see what's happening here? As the more we trade into the session, volume decreases. 4 minus 5 minus 10 minus 10. What the market is doing? The market is doing nothing. The market is trading in range. So this piece of information plus this piece of information plus what we have yesterday, what we have in the overnight, they are just overlapping to each other and all just confirming something that we have assessed from the opening, even before the market opened, that they also we're going to have a rotational market, a choppy market, were just high. And the market advertises that, and the market is delivering that. And the way, the kind of trade I am, I started to identify that at the beginning, at the opening, before the market opens, doing my homework when the market closes, towards the next day, right? And the next thing is just, I think this is one of those days that it is just good. The best thing is you just keep myself outside, just watch. I didn't see anything. It doesn't mean something is going to happen, right? The fact that I see this going on right now, it doesn't mean I'm going to walk away. If I have something to do, this could be a good time to do it. If I can stay in the market, remember that's what I am. I am a trader. And most part of trading, most part of the business here is preparation. It's observing, watching the market. Just like any other job, any other business that's competitive in nature, preparation is key, right? This is you perform the performance business here, the performance part of the business, just like any other that is competitive in nature. And what is that? What I mean by that is, for example, basketball players, baseball players, they do prepare a lot. Right? Football players, they do prepare a lot. Actors, what they do is they study film. If they are these athletes, right? They are competing against other teams. They study films. They start the play. They are going. They study their opponents, right? They read the script. If they are actors, for example, if they are doctors, the surgeons, the preparation part takes a lot of time. It can take weeks, and the performance is just 1 hour, for example, 90 minutes, 60 minutes. Trading, that's what it takes. When I trade, it's 15 minutes, 30 minutes, 1 hour, 2 hours that I stay in the market. I may stay. Most part of the time is faster than that, because most part of the time I'm wrong. But I have a play. I have a study what may happen, what can happen, what I need the market to do, or when something happens that I want to happen doesn't happen, and the market starts doing the opposite, I just get out. I try to minimize the losses because I have assessed my risk. And even having this risk assessment, it doesn't mean I'm going to be right 100% of the times. So the odds for me here of being wrong, either if I am in the long side or on the short side, are high. are just too high to be in the but just let the market settle, let the market do its thing. I expect something to happen, okay? Especially because we have rate decision next week, we have PCE next week. I expect something, some kind of directional move here. When that directional move is going to happen, I don't know. Something happened yesterday. When the next one is going to be, I just don't know. And nobody knows that. The only thing that I know now is that my risk, and I speak for myself, not for somebody else, it's my risk of being long and short in this market. If I decide to be long, I don't like these lows, I don't like this buying here, it's high. If I decide to be short, having these matching lows are extremely risky for a short side. POC is getting wider. The trend remains in the POC because POC is being moved lower and lower and lower and lower each time. Value is inside yesterday's value area, which is a balance. Well, the market has even though I have said here, the market hasn't done anything here. So far, this spike to the downside is being rejected. The upside spike remains intact. The trend to the upside in the bigger time frame remains intact. Odds are that this is some form of rebalancing of the long inventory in expectation of the next week events, the release of news that's going to happen next week. Now, what is next now for me? I don't know how the market is going to end here, how the market is going to close, but if the market closes as an inside bar here, inside meaning we're talking in the daily time frame, right? Inside is a form of balance. The market will be forming a balance just above this balance, this range here. It's forming another range here. Trading inside this range targets the opposite side of the range. Have you seen the monthly? How this monthly is, how the monthly high is? We have excess in the high, excess in the low, but this one is kind of close to this, relatively close to the high the market made back in March last year. The market is super hyperextended. The trading is very, it is very clean in the weekly time frame. The weekly time frame here. Notice that you can also move this trend line down here or put it down here. Notice how this matches, how this is a clean. It looks like some trading, big time or medium time frame trading here. And you may have heard about the pain trade, right? Everybody knows that there is a lot of money on the sidelines. What this money that is on the sidelines is going to do when they see this market, having this tremendous rally here. Right? If they are on the sideline, in the sidelines, down here, up here, up here. They're not taking advantage of the market. I have started to hear, right, some, or to read some news, some pieces that I don't know because it is true. Because at the end, nobody knows, right? Nobody knows. But there was these hedge funds were underexposed to take or to underexposed to in equities. Right? And the equities are having a huge rally. And notice what the other markets are doing, right? Now you're investing in bonds, you pretty much got zero returns now. Nothing. You have gold, the dollar is okay. Oh, look at this, look at the dollar. And that, but the exposure has increased. I have read somewhere that some funds are now like have 90% exposure. It is true? Is that true? I don't know. But once, and what's important? What that is important? Why is that important? Is because once, and that's bigger time frame being cut short, right? Anything in any kind of short, when you get your trap, you are getting caught on the short side. When there's a squeeze, when you are caught short, the market can go just to extraordinary lengths. Because it seems like it's never going to stop rallying, and you think the market is going to stop. Finally, it's going to run in the opposite direction, and you just start. You keep your position, and the market just keep rallying and rallying and rallying and rallying and rallying. Oh, okay, and when you see this market is never going to stop going to the upside, you finally throw the towel and close, right? You buy to close, and right after you buy to close, the market just go in the opposite direction. Something like that phenomenon, that kind of dynamics happens in all time frames. It happens all the time in the intraday. It happens all the time here. You have seen here that these shorts, these traders have been cut short here. Short in the market at unfair prices here. They are being squeezed to the upside. There's a short covering here. It happens all the time. It happens as well in the daily time frame, the weekly time frame, and also in the bigger time frame. It doesn't happen that often. The higher you go in time frames, the less often that occurs, but it happens. What I have from Jim, and he is Jim Dalton. He is a very experienced trader. He has 50 years in the business. Now that quote unquote Jim Dalton here is, you will see this kind of events a couple times in your trading career. This is something that doesn't happen that often. Okay, so don't expect this. And the odds that that is what is happening now are high, because everybody knew that, right? Everybody knew there's a lot. If I knew that there's a lot, if I know that there's a lot, if I knew there was a lot of underinvested hedge funds, there was a lot of cash on the sidelines. Okay, I knew that experienced traders, bigger money, bigger companies, of course they know as well. And they even have way more information than I do. and forcing that money, forcing those under invested hedge funds or whatever into the market is what fuels a movement like this. But the thing is, okay, once this is over, and it is over, we don't know. I cannot tell you when it's going to end. Nobody knows when it's going to end. We will know it's over when it is over. There's nothing there. There's not a signal. There's not an indicator. There's nothing there that will point with signal, with bell, or will sound that the movement, that phenomenon has ended. Nobody knows. And when that happened, I think the odds that when that happened, when that finally happened, there's going to be there can be, the odds that the market has some kind of serious correction are high. Because just look at these gaps here. All the buying coming from the 4,500 here, all of this market, all of this range, all of these days are just above to have a base, which is the 4,500. The breakout is the 4,500. Gap here. I can see a gap here, but I don't consider this a gap because I think this is just contracts roll over here. Have another gap here. Firecracker potential here. 4 lows here. Quadruple lows here. Plus a gap. Plus buying at the 50, plus triple low, plus another buying at the 50, plus another gap, plus another buying at 200, plus another buying at 200. It's all the way down to the 3,900. And look, also another thing, this is technicians use this a lot. It's very far from the major moving average. Now, don't take me wrong, I'm not saying the market is going to break, okay? Because just look at this. Just what kind of market is this? This is a bull market. This is all this is when this is coming from. 2011. This is a monthly time frame. Let me take weekly time frame. Where's the weekly? I got a weekly here. I'm going to zoom this. My bad. Let me do something else. Instead of being let's go back to maximum, but I'm going to put I'm going to do my time frame weekly here. Look what the market was worth in the weekly time frame, 200. And of course, we all know what's happening in the daily, right? This is more widely used. I don't like this low, this high here. This low is very questionable as well. It says some buying that was triggered on last. I expect if the market comes back to settle, I expect some buying, some at least trying to buy here. But this time, this is going to be the third time the market is being bought from seller. If that happens, value is inside value now. The more times the market trades sideways, the more time the market do sideways trading here, the lower the odds are that this value is going to be moved lower. to move value lower. For example, if one or two more pillars are added here, then this market will need to have a significant break to the downside. What the market needs to do to move POC lower, for example, it is easier to move POC lower. It is easier to move POC higher. What is the condition of the market at this moment? Okay, so be careful out there. This is a rotational day so far. They also chop market advertised choppy market advertised rotation, and chop and rotation was delivered today. Okay, if you have any question, please let me know. Otherwise, I think this is it for today. I wish you a good rest of the day. And have a good rest of the day. Have a great weekend. We see you next week. Bye bye.